Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The market today went to the store and bought some red paint. Market-wise, let's take a look at it out here. We have the Dow Industrials down 724, NASDAQ down 178, S&P's down 73. Dow Industrials, that's 2.9% move on the way down. NASDAQ 2.4%, S&P's 2.7%. Gold contract up $7.40, trading at $13.28 an ounce. Silver, $16.38 an ounce. Copper flat, $3.01 a pound. Light sweet crude down. Let's see, we're down about $1. We weren't down much. Light sweet crude, yeah, down 92 cents, trading at $64.24. We get over to let's go take a look at the note and bond market. So, notes and bonds, folks, bottom line, go top side. Once again, the correlation here is kind of back to what happens when you get down markets, meaning specifically when we go back to the February 9th level. The first leg down in this market on February 9th, well, from the 1st to the 9th, you had markets going down, bonds going down, yields going up. That's what really started the first downdraft, the first selling. You go back top side, do a counter trend bounce, have light volume. The bond market at that point had gone sideways for a full month. You know, the low in the bond market was February 15th. That being said, what ends up happening is that on the March 1st, we had a big sign of strength inside the bond market. Pulls back again with lighter volume. Guess what? You get another sign of strength. This is saying that the 10-year, which is at 120.18, that wants to run up to the 122.02. We take a look at the yield out here. What you have with the yield, bottom line, is that you yield in 2.824. We take a look at the 30-year. What do we have with the 30-year? 30-year was up almost 1.5 points today. You did 437,000 contracts, big number. You got into the swing point, monster volume into that swing, so you get 40. Yeah, you get an ABC up. So 30-year, that wants to run up to 146.21. The real kicker is that when you get up to those levels, we'll find out if it has more juice at that particular time. King dollar. What do we have with King dollar? King dollar, $89.42. Bottom line is that you did 26,000 contracts out here. You have a lower swing point. That lower swing point is at 87,830. That's where I figure you want to go to. That's in the smaller basis. The larger basis, folks, that King dollar has been on a large ABC structure on the way down. If we take a look at this, just to review exactly where this baby wants to go, what you're going to see is that King dollar has been going lower since the first week of January of 2017. Broken lows, broken with volume. There's not much holding this. What's holding King dollar up right now are the highs from 2008 and the highs of 2010. That's where it's getting, some support. I suspect, number one, this is the third month we've been here. You're building more cars to get down into this $78 level. You get the steel tariffs, you get the aluminum tariffs. Now the bottom line is that when that was announced, that's the here and now. Guess what? Today you got they're claiming $50 billion in China goods. What you did do is that, there's plenty of things that China can come right back at in a second. The ambassador was out here today. Let's see. The Chinese ambassador said the nation would return fire on the tariffs as the Donald Trump said that bottom line, we're putting tariffs on them. The quote is, "We don't want a trade war." Well, guess what? They have one. That being said, what that does, it does a few different things. You're going to need less dollars when there's less product. That's the real bottom line. It's the first one. Tax-wise, tariff's the tax, folks. No matter which way, you're going to hear left and right, the country that we're putting the tariffs on, that is what is going to pay them. Guess what? It's not even close. Let me show you something. Last time the tariffs were put on was in George Bush's administration. And when you see this is like such a heads up. It's amazing. The tariffs were put on in 2002, I believe. 2001 or 2002, either one of them. We were at 121. You know what we did? Straight down, and this is when Jon Snow was there, and Jon Snow always, I remember this so well, we believe in a strong dollar. We believe in a strong dollar. Well, guess what? We went from $120, 120, and January of 22, straight down too, by the way, to 84. Why? Because guess what? Tariffs, taxes, the amazing part about this whole deal is that we get a tax bill that goes through, so that gets relief for workers, and then now there's going to be taxes, now there's going to be tariffs that are in place. It's going to be huge. And what will happen, you can see with the steel ones, they say one thing, then they're going to basically relieve most of the countries that supposedly import steel. They're going to be exempt, and you can see today what happens with U.S. Steel. U.S. Steel just went from a high of $47. You're at $34 right now, and you have volume. So it's all show. That's not fun. Show, it's one big show. It's the freaking Truman Show, so get used to it, because we're going to be in this for a while. Guess what? Picking your pocket at this point. Dow Industrials down 724, NASDAQ off 178, S&P's off 74. Coming right back.